Hey everyone, welcome back to the channel. My name's Ash Anderson and today we're going to be taking a look at a company called Rocket Lab. We're going to be diving into their financial model and seeing if it makes sense as an investment today. So let's talk about Rocket Lab. Rocket Lab is it's a launch service provider, sort of first and foremost. That's probably how you heard of them, which means that they help people launch rockets into space. And so let me just pull up their website so you can see real quick what that looks like. Here's Rocket Lab. They help people launch rockets into space. And now where they're differentiated from something like SpaceX is that Rocket Lab focuses on the much smaller market. So SpaceX launches tens of thousands of kilograms into low Earth orbit. It can go to different places as well on its Falcon 9 rocket, but tens of thousands of kilograms. The Electron, which is Rocket Lab's sort of only rocket at this point in time, it does have a variant called Haste, but the Electron is its only rocket that's launching today, has a payload capacity to low Earth orbit of 200 to 300 kilograms. So 200 to 300 kilograms or 20,000 kilograms. There's a vast difference there. And that's sort of where Rocket Lab is differentiated from a company like SpaceX. It's if you have a 250 kilogram satellite and you want to get it to space, your options are, well, you could go to someone like SpaceX and say, hey, could I get my satellite on your next launch? And they're going to say, sure, but it's going to this altitude on this rotation and it leaves on January 20th. You have to say, yes, sure, that's all fine. If you go with someone like Rocket Lab, it might cost you a little bit extra, but you get to decide when it launches, where it launches, how it launches, what its orbit looks like. You get to control the full launch. So that's the difference there is, if you don't care where your satellite ends up, you just want it in space, sure, SpaceX will work. You can hop aboard a Falcon 9 on rideshare. If you care, there are companies like Rocket Lab and some of their competitors that will help you plan a launch that makes sense for you. So today we're going to take a look at the financial model, which is valuing Rocket Lab, or doing our best to value it. And Rocket Lab obviously has a huge following. There's a lot of people, a lot of fans of Rocket Lab. So, the caveat what I'm about to say with this is just my opinion at this point in time. My opinion does obviously change as new news comes out. And my thoughts on the company changes as things change, right? Rocket Lab is in a very special place in that we don't really know what the space industry will look like, say, 2-3 years from now. There could be a massive advancement that changes how things work. There could be lots of changes that are just sort of out of our realm of understanding right now over the next decade. And so it makes it very difficult to say this is what Rocket Lab will look like in 2028. But we're going to give it a go anyway. And so the best place to start is down with Rocket Lab's segments, and ignore this off to the side right now. We'll talk about that in a little bit. But Rocket Lab's segments. The company breaks itself down into two different segments, the largest being space systems, and the second largest, but the most prominent from like a publicity standpoint, is launch services. All starts down here with successful launches. So I've got the past few years. In 2023, the year has already ended. They haven't reported financially, which is why these are still estimates at this point in time. But we do know for a fact that the company had 8 launches, 1 failure for 9 total launches. And we can calculate revenue per launch at $7.9 million. So it costs about $7.9 million to get one of these rockets up in the air. And I've got a growth per year right here on the cost of getting those rockets up. We can change any of these numbers. So if you thought it was going to grow by 20% there, you can change that, and it changes the whole model. Gross profit costs per launch. Again, these are derived from the values above. So roughly know from the first 3 quarters that it's costing Rocket Lab about $6.7 million per launch. So they are now profitable on a per launch basis of Electron, which, as you can see, for the past few years, they have not been. But on a gross profit basis, they are now gross profit profitable. And I see those margins sort of growing over time. So we'll start here, right? The company has confirmed 22 launches for 2024. I have the growth going up quite a bit. They're becoming more prominent. They're getting some bigger names under their belt. So I have the growth, or the cost growth, jumping quite a bit to $9.5 million. But the gross margin growing as well to 23%. In their most recent Q3 report, they did say that they're hitting around about 20%, 27% rather, gross profitability on these launches. I'm going to keep it at 23%. It just makes sense. I feel like maybe, there could be a Neutron, which is their, let me pull this up right here. Neutron is their newest rocket. that is not yet ready to launch. They're still testing it, but the hope was that they would be able to get 13,000 kilograms to low Earth orbit. The hope is that they were going to be able to get this flying in 2024. Let's say they can. It's probably going to be a big hit on those gross profit per launch. So I don't have it hitting that 27%. Now 2025 is when I would expect that we're going to start seeing Neutron launching a little bit more. Maybe a customer or two has booked some time on a Neutron and deploying some satellites. So I have the launches growing to 30. This, now that I'm thinking about it, now that I'm talking through it with you, should probably jump up a little bit more, because while we have, $6 to $8 million range for launching the Electron today, the Neutron is, as you can see, 13,000 kilograms to low Earth orbit, so it can deploy a lot more. And if we look at the Falcon 9, the Falcon 9 is, and this is just according to Google, right? The cost of a Falcon 9 launch is $67 million. So $67 million gets you 23,000 kilograms to low Earth orbit, which to me means maybe Rocket Lab can charge like a $35 million for these Neutron launches, which is a considerable amount more than what they're charging for Electron. So instead of down here, maybe this does start to take a big jump where we it's 25% now, because some of these launches are Neutron, which is going to be a higher revenue on those launches, but also the costs would be higher as well, which is why I did have the gross margins dropping again. Right here as well, we've probably, if you expect that Neutron would be launching more, you probably also have like another 20% growth in revenue here, and then you start to get a really sort of fine balance between the Electron and Neutron launching on these subsequent quantities. So I have it growing, 30 in 2025, 40 in 2026, 50 in 27, and this is where those questions start to come up. What does space launching look like in 2027? Is there still a need to be getting satellites up there? Right now, a majority of the launches that you see out of SpaceX, that you see out of Rocket Lab, are communication satellites. Do we reach a point where there's enough communication satellites in space? Probably. I don't know when that point is, but it seems fine to me that we would probably have, a company like Rocket Lab could probably get to 1+ launches per week by the end of the decade. And maybe, technology advances, right? We've got a company like, let me pull up their website as well. We've got a company like Varda, which, if you haven't heard of this, super cool. So Varda is using Rocket Lab. They're using Rocket Lab launching and Rocket Lab space systems. But Varda is going to be doing manufacturing in space. This makes very little sense to me from the science behind it right now, but I'm going to look into it a little bit more. So you see, they're doing pharmaceuticals, right? So I guess the idea is that in space with no gravity, the proteins of different construction or I guess pharmaceutical manufacturing, the proteins react differently in outer space, which means you could make different drugs, better drugs, things that work differently. And so Varda is a company that's trying that out. And so while some might question, are we going to reach peak communication satellite in 2026 or 2027? Maybe we will. But there's going to be things like Varda that come along and say, yeah, well, we don't need communication satellites as much as we used to, but we do need to keep shooting up different drug manufacturing satellites, which, again, super sci-fi, makes very little sense right now, but I guess one day we'll be going to the pharmacy to pick up something that was in space a few weeks back, which, mind blown. So I think that this is fair, right? 65 launches in 2030 is probably on the conservative side, should Rocket Lab be a going concern. And that's the big asterisk on this video is, should Rocket Lab be able to manage its costs sufficiently enough to make it there? 65 launches doesn't seem outrageous. It, like I said, seems as though it might be a bit on the low side. SpaceX, by comparison, in 2023, so last year, had 98 launches. Rocket Lab getting 65, might be a little bit under. They could conceivably be at 120 if a company like Varda is trying to launch a new drug satellite every week and bring one back every week with more and more product in it. I said, though, we'll keep it at 65. I think that's fair. It doesn't, stretch things to an outrageous amount. I realize that I'm talking here, and you can see all that valuation data, which kind of spoils the rest of the video. But no, so space system revenues is this is really the satellite manufacturing. So you see it grew 546% from 21 to 22. I've got it down at 15%. This is actually based on the numbers. If you look in their Q3 report, 15% growth seems where it is about now. If it go on 15% though, pretty much through these years, I give it a bump in 2026, 2027, or 25 and 26, just because of, again, Neutron, maybe bringing different technologies, bringing more interest into a company like Rocket Lab. And so that is what is driving that there. 15, 10, 10, 8. You know, and again, going back to what I've said throughout, this conceivably could be a lot more. We just don't know how space would be at that point in time, but I'm trying to grow it at rates that, you know, make sense, are conservative, and not like just saying, hey, this stock's going to be a $1 trillion company by 2030. That is probably not feasible, but being conservative and still seeing if you can make, I guess, a profit or a return on your investment while being conservative that's the path I tend to take. So that's that. This is today. It's got gross profits of around about 17. I got it going 20% for 2023. I think they can grow this to like a 35%, and maybe that's where some of this should come in. Gross margins at different aerospace manufacturers. So you see Boeing's really low. That's fine. Raytheon is, I guess it's RTX now, but formerly Raytheon is like an 18%. Lockheed Martin 12%, but then you've got companies like Heiko, which is 38%. So it is within the realm of possibility that a company like Rocket Lab, especially with specialized systems, could achieve like a 35% gross margin on these hardware-like products. Space launch, though, where we've got the 45% gross margin, that's like something that you can't really gauge. So there's no comparison here that we can look to and sort of draw inspiration from for getting that number. So I've gone with 45%. Alright, because it's rather unique, right? So going up now and summing up those revenues, this is how things look. We have the company at $250 million in revenues for 2023, growing to like 1.4, 1.5 billion range by 2030. And so if it grows there, that is some decent growth, you know. $1.5 billion in revenue is definitely a considerable company at that point in time. The costs would be quite high, but we're still left with $600 million in gross profit. This kind of stuff is where things also get a little bit tricky. Research and development is gonna remain high for a company like this. It simply is. They can't zero out research and development on a company that is going to space, right? They're gonna have high research and development costs. Where they could look to save and where they probably will look to save is on selling, general and administrative. And for me, the selling portion of this, so, you know, you've got to have a sales team that's going to go out and sell stuff, especially to like the government. But to me, the selling portion of this is the part that Rocket Lab, just by its nature of what it does, has their YouTube channel, right? Is sales, because people are going to their YouTube channel to check out a launch. Their CEO, Peter Beck, is himself just an incredible salesman. He once did, with Neutron, he did a video where he ate his hat. He said they'd never have a rocket that'd be, you know, they'd never get into the large rocket game or human space flight, or he'd eat his hat. So he did eat his hat. So Rocket Lab in itself is a very good selling machine. And so I think that those costs could come down quite a bit over time, and that's where I'd be looking to say, are they keeping costs under control? Are they bringing down this SG&A as a percent of revenue? What this means, though, is because these expenses are really high, the company, at least in this model, does not reach operating profitability until 2030. So that's where I was like, no, they're gonna have to bring these costs down very fast. And so, yeah, if we rewind that, you see, in this case now, they reach operating profitability in 2029. But I still believe that that's probably not going to be enough. Like, they're going to need to reach operating profitability a lot sooner. 2025 would be nice, 2026. But to do that, they're going to have to considerably cut back on R&D, SG&A, or massively increase these revenues. And I guess either of those three could happen, especially with Neutron. If Neutron sold really well, this number could balloon. If they were able to start selling their space systems to other people as well, this number could balloon. But for now, like I've said throughout, trying to be conservative and get to a better answer here. So these numbers, you can play with them. The model is available on techbreakdowns.com for subscribers. You can play with these numbers and change them out. I've pretty much just zeroed them out. They're very minor. I guess they're not very minor when you have 244 million in revenue, but they are very minor when you have 1.5 billion dollars in revenue. So for right now, zeroed out. Similar to the income taxes, obviously they'll start paying income taxes, but just headed towards zero. But taxes are expensive, so they will play a pivotal role at some point in time. But for right now, it's a sort of negligible charge in the grand scheme of this company. So that brings us down to like the shares outstanding. The numbers are so large, I didn't make it look pretty numbers wise, but you see I've got the share count growing for Rocket Lab. So this is approximate to right now. If you look at their Q3 report, we're at like 489 million outstanding. I think that's going to grow still year over year. It'll keep growing until there's a point where, perhaps it doesn't grow as much because the company's now big. But towards the end here, I've got it growing it doesn't grow that much towards the end here. Maybe they've started to slow down the share-based comp. Maybe they've started to initiate some buybacks, but this is actually growing, but you can't see because of the significant digits being hidden. But 515 million shares outstanding by the end of the decade. And so you see there is net profitability in these last 2 years. Again, I think that if this company is to be a going concern in these last 2 years, it needs to start reaching profitability earlier than I have it here. But we have to see how that story plays out. All right, valuation time. So I've got 3 different valuation metrics here. These are all based off of others in the sort of aerospace space. So first off, we got the free cash flow margin. So these are obviously real free cash flow margins. And then I used right here free cash flow margin data from all the same companies that we looked at before. You see that the average is 9.5%. Some of them get a little bit higher, like Heiko right there, or TransDigm right there, 19%. That's really good. But by and large, they're sticking around about 10%. So I do have it growing to 10% in 2030. You could say it's going to be a lot better. They'll be a lot more efficient. So maybe they get to like the 13% we see here, but keeping it right there at 10%. And so what that gets is free cash flow positive from 2026 onwards. I think that's, again, more likely that we see that in like a 2025 onwards, but we'll keep it as it is. 25 times free cash flow, 31 times and 42 times, which goes price to free cash flow of those same set of companies. The average is 42, the median 31.2. That gets us to a share price of $6.66 on the low end here for free cash flow, $11.18 on the high end if you're going with the average of those companies. And we do a similar thing with price to earnings. Obviously, the company in our model is not profitable through 2028, but then here it becomes profitable, which gives us a low end of 443 below the share price today, high end 909. Not double, not quite double, but still a good return there. And then price to sales as well, which Rocket Lab may still be priced on a price to sale basis in 2030, just because space, I think as I mentioned at the top of the video, space is a new segment. It's brand new, it's fun, it's exhilarating. In 2030, we still could be like just in the first or second inning of space and as a business. So there's very conceivable, but like a company like Rocket Lab could be worth 7x sales in 2030. So I've got that down there as well. Comes neat over here. Now, if you've watched any of my other videos, I tend to value like that. Not really a good way to value when the company is cash flow negative. So this is what we're looking at, which is the valuation table. So the sort of bear case above says, hey, we got an average price of 555, which depending on when you're watching this video, that's either like an average return of no, there you go, it's 540. So a tiny return, but annualized absolutely nothing. So you don't want the bear case. the mid case has it at 905, which is at 9% annualized return. The bull case has it 1326, which is annualized 16%. So that'd be really good. And like I said, I feel like there's like a super bull case as well that we probably could pay attention to here, which that super bull case would be changing a lot of these numbers. You know, they get to 100 launches. They get to they're able to bring R&D down to like 18%, and they're able to bring these costs down to like 12%. And you know, maybe they do start some share buybacks here, so they're negative 2%, and so that super bull case will now be like 2134, which is 25% per year. So there are a lot of different cases, a lot of different things at play. But this is just one take of Rocket Lab, and sort of this is going to be a company I'm going to follow much closer going forward. I've loved diving into it so far. There's going to be an article on techbreakdowns.com. This model will be available on techbreakdowns.com, and I'll follow up with a more detailed video about Rocket Lab and sort of what it does, and we'll look at some, you know, fancy video footage and stuff like that. But yeah, I hope you enjoyed the video. If you do have any questions about how certain metrics might shape the company in the future, or if you have any feedback about where I might be thinking wrongly on this company, drop a comment below. I'd love to learn from others. I've been dabbling on the Reddit and learning a lot about what people think about this company and sort of how it might evolve and grow over time. For now, though, that's the model. Thank you for watching. Have a good one. I will see you next time.